The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien and Steve Rhodes.
Welcome, folks. You got half of the team here. Tom is still on vacation. He will be returning Wednesday. He'll be returning. Of course, he probably would prefer to return on Wednesday, knowing where he is at and absolutely having a great time. But he will be here bright and early Monday morning, and I know we're all looking forward to his return. And thanks so much for joining us. You've got the Dow up 4 points right now. S&P's flat. You've got the composite down 3, small caps off a point, Apple trading down $4.60. You don't hear that too often. On the upside, you've got Priceline. They're trading up $7 right now. Atlas Resources, ARP, they're trading up $6. CF Industries, they're trading up $4. You've got CME Group, they're trading up $4. Pioneer National Resources, Perfect World, National Oil, Varco, NOV, they're trading up. That's interesting. We'll go take a look at the XLE. XLE has been the weak link in the sectors that are out there inside the S&P 500. We'll see if they're going to go ahead and join in on the party. You've got Potash, POT, they're trading up $1.61 on the downside. Apple leading the charge off $5 right now. And I'm just going through these folks in dollar order, if you will, not necessarily percentage order. You've got OGXI, Oncogenics. I believe that is a new issue. That's trading down $3. That's down 18%. Rock 10, RKT, they're trading off a couple bucks. Buffalo Wild Wings, they're down $2.43. We'll take a look at them. Rail, that's Freight Car America, they're trading down a couple bucks. Getty Realty, Whirlpool, having a little bit of a down day. That's been a strong stock. $1.87. ICE Intercontinental Exchange, they're off $1.79. Fossil down a bit. Granger down a bit. 877-927-6648. And let's go take a look at the ETFs that are out there. Let's go take a look at the Qs. See what we've got going on, because it's not often that you have Apple trading down. And what you do have, folks, is I've got this little trend line here that I have used. And I like to use trend lines as one of the tools. You know, there are many different tools that you can use for trading these markets. And I do like using the trend lines, as you will. And go back and take a look at the Qs on the longer-term trend, just simply coming off of the December low that was put up there. You can see how the Qs have just simply powered their way up. You know, we could put up a 9-day EMA, but Basil, he's coming up next. So we're going to let Basil put down the 9-period EMA, whether it's on the Qs or anything else that you might be trading. What you can see is that the Qs, you know, gave a signal that there was going to be a little bit of a correction. They did that by closing below that trend line on March the 5th. You can see here how that really had not occurred. The trend line had been touched, if you will, but you always had to close above it. And on March 5th, you know, it was giving you a signal. What do you do on March 6th? You gap down inside the Qs. You then start to make your way up. Now, I'm going to go ahead and do this. We did this on the DAX earlier, and just simply show you this shorter-term trend that seems to be in effect here. And what we'll see is even a stronger rise, if you will, from an angle standpoint than what we've had coming off of that December low. Is that the beginning of the next portion of this bull move? That may be, folks. But if you take a look at this trend line here, the first one that we're showing, what you'll see as we blow that up, you will see that the Qs traded right down into that area. Got to a low of 66.39, trading out right now at 66.43. If we take a look at just simply this trend right here, actually, you know, if I do it, well, I'm just going to leave that in place here. So it's up against a couple of strong trends. So you're going to want to watch the Qs today, you know, because that has been the strength inside the marketplace, if you will. And if this area here decides to break, just as we got a signal right back in here on March the 5th, what it says is some correction is coming. Lower prices doesn't mean you have to bail out. It just means you need to know what's going on in the marketplace, and that's why you are here. Let's go to our first caller. Let's go to Lewis in New Hampshire. Lewis, thanks for calling. Thanks for holding. How are you today?
Good. How are you, Steve?
I'm doing excellent. You're going to have a nice weather weekend up in New Hampshire?
Yeah, I think so. Looks like it's warming up.
Winter's gone? Is that the deal?
I think so.
Really? Oh, my goodness. Oh, my goodness.
I think so.
Yeah.
What a winter.
Good. You wanted to look at Great Basin Gold. Tell me what you're doing here and how I can help you.
I'm just looking for an entry point if it looks right. But
yeah,
what happened to it?
What happened to it? Well, they ran into some problems for sure with some licenses or partners, or I don't have all of the details actually on that, but they did run into some problems there. Let's go take a look at the stock and see how it's trading and what the real issue is out there. And the real issue is, when I take a look at this one, folks, or take a look at this one here, Lewis, I'm just simply going to draw the trend line, and I've got a monthly chart up on my screen, and the all-time low on this was 73 cents, and that was back in December of 2008. You're trading out at 71 pennies right now. And from a volume standpoint, again, if you go all the way back into 2008, we're already through that in the current month. And what you want to do is, there's only a few people that are in this stock that have any kind of profit, and those would be the people that bought at the lows yesterday. So I would, let's just take a look on an intraday chart basis. Do you feel really compelled to buy this?
Not really, no.
No? Okay.
Just, looking at the lower price.
Yeah, no, I know. Look, if you're going to trade this, you had some volume that certainly came in on the 5-minute chart yesterday. You had 1.5 million shares, and the low down there was that 67. Was that right? 67 cents? Yeah, 67 cents. Yeah. And sorry, I had to look twice. And so get down to 67 cents. If you wanted to enter a trade because you were compelled to trade this, then you would put a stop somewhere underneath 66 cents probably. 65, 64, something like that. There was a slight sign of strength yesterday on a 5-minute bar. That low on that was 70 cents, and the high there is 72 cents, but not like a substantial, volume. Take 617,000 shares times 70 cents. That's not a lot of conviction for, it's not. I doubt that was a institution that was in there that was buying it.
Right.
And that's really what you're, when you're playing a stock like this, you'd rather be looking for signs of strength, quite frankly, on a $50 stock, something that would be pulling back, and then see, a nice volume sign of strength. And I wanted to make that differentiation, for the folks that are out there, because we talk about, looking when you're buying something off of a bottom, waiting to see a sign of strength and then waiting for it to pull back. And those signs of strengths, when you have a more expensive stock, then you're going to have some institutional buying in there. If you just do the math on this, you're just only about $300,000. And that's when you consider the market, that's just not enough money in there for it to be any kind of institutional play. In my opinion, that's what it says on something low price like this. So trading really flat, no volume to speak of here. And if it were me, I would just be looking for someplace else to tuck my money.
Right.
If that helps.
What do you think about this Bradley model that's happened yesterday?
Well, it's a longer term model, and it's based on a number of different factors out there. So it's not like it doesn't act necessarily like a full moon or a new moon or better yet, apogee and perigee, if you will. So it's a longer term cycle. We'll just simply wait to see how it plays out. There are caution signs that are out there, and how people should use that is just simply to be aware of possible detour signs. At least that's how I take a look at it. So, I've got a list that's always on my desk of different major astro or lunar aspects. It's right here in front of me. And it's a fairly thick document, and it's really for all of 2012. So I can always go to each day, take a look, and see what might be going on up in the universe, because I do believe in the power of the universe. I don't believe there are any coincidences out there. I've had two great examples of that this week. Just simply, in being out in the evening or what have you. One was going to a concert a few days ago, and there not being any real no tickets available, except for one guy that had flown in from Chicago, was with CBS, and lo and behold, we walked the same, in a corner of Detroit, a needle in a haystack, we walked the same footsteps, if you will, at times. And then last night, while I was watching many of the games, just seeing how my picks were doing, sat next to some guys that just, happened to be in from Laguna Beach. And, Laguna Beach, if you've ever been out to California, folks, absolutely fantastic place, and have spent quite a bit of time there. My favorite bar is Las Brisas. Great place to get a margarita. Do you drink margaritas?
Yeah.
Do you? You know what? I don't drink margaritas. I like the tequila. Just give me a shot of tequila, and it works a lot better for me. But, I know a lot of folks just love the margaritas. I'm like, just I'll take the shot, if you will. But, as far as the Bradley dates, the area that you just need to be cautious with, I think the biggest caution is this right here, which is the New York Stock Exchange, the daily chart that I've got up on my screen. And the reason is that because what you've got, if you take a look at the Bradley date as being a time-based indicator of when you should see some type of market turn. And in that case there, what you're also looking for is, what other type of patterns are there that are present in the marketplace? Well, I think the NYSE, the New York Stock Exchange, the symbol, if you're looking at it on Tiger TV, and mine is NYA, what you have here is you've got a 0.786 Gartley sell pattern. These are patterns that you wait for. You would create this type of pattern on your chart and wait for price to get there. You would be patient, and you would be selling when it got there, and you'd have the appropriate money management in place. So having a key turn date, and it doesn't have to start yesterday. Yesterday was the actual date, March 15th. It doesn't have to start yesterday or today. It's got an orbit. It's got a window, if you will. You just need to be aware of it. How would you trade it? I would just I manage my trades while I'm in them based on other patterns and volume configurations, but I'm always aware of what else is around there, and we'll just see how it plays out.
Nice toolbox you got.
It is a great toolbox. One of the things, I had to spend a lot of time, a lot of money, a lot of energy, and mostly on that time side. You take a look at the number of hours that I put in order to have this toolbox, and it's literally more than 10,000, which is what you need truly in order to be able to master anything. But what I have learned is techniques to be able to link knowns to unknowns and help people get from A to B in a much, much faster period of time, as long as they're willing to open themselves up to visually see what's out there. And that's, Lewis, what I'm going to be doing when I come up into that your neck of the woods, if you will, when I'm up in Boston at the end of the month doing my Master Trader course. So, folks, I'll be out in Denver next week on Friday, Saturday, and in Tampa on the 13th and 14th. So, Lewis, when it comes to Great Basin Gold, find something else to do with your money. All righty?
Gotcha.
Okay.
Thank you, Steve.
You bet. Have a great weekend. Folks, we'll be right back. 877-927-6648. Give us a call. It is Fabulous Friday, and I hope you're off to a fantastic day. We'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Dow trading off 4 point, relatively flat market. You can go water skiing out there. So how about if I teach you? How about if I teach you something? How about if I give you a tool? You know, we had Lewis on and was talking about my toolbox. How about if I give you a tool that if you just paid attention to this tool, if you just worked this tool, if you had patience, it will make you money. You know what it did for my clients and I this morning? We already exited half a position with about 37% profit. We've moved our stop up. We're going to cover because I'm going to show you that trade. It was something that we entered last Tuesday. In fact, it was just before Tom and I were doing the final Go Long America tour session that we did here in Tampa, and it's a 7-step process, folks, that you go through. I'm also going to throw in there the summation index. Some of you may or may not use it. You hear about the trend is your friend. You want to see a tool that will help you to understand what the trend is. You know, it's the summation index, and then I'll just simply finish it off with the with the expectancy table. So let's start off with step 1. We talked about if you did catch me during the Trader's Edge show. You did hear me as the pre-market. Our trade that we're in, EXM, that is the ticker symbol on that. That's XL Maritime. And what we were taking a look at, folks, here. So let's just go to step 1. Let me just get it out. let me just go right back to the beginning. So step one is simply identifying a breakout. So what is a breakout that you're looking for? Well, a breakout, folks, is where you have wide price spread. You heard me talk about a breakout even with Lewis when we're taking a look at Great Basin Gold. What you want to see is wide price spread. And wide price spread is nothing more than a long-range bar, a wide-ranging bar. That is this bar right here. You can take a look at this bar compared to all of the others. You can see this thing had some juice. Not only does it a breakout, you opened up down here, if you will, at the low of the trading session or almost near the low. You closed at the high. This, folks, is a breakout with a wide price spread. Then what you're looking for, you might see a wide price spread, a wide-ranging bar, but the question is what's the volume behind it? When you take a look at EXM, you can see, just take a look at the volume that you've got going back here. And part of the reason why I'm doing this, I did this during last night's show at 5 to 6. I may do it again from 4 to 5 just to go ahead, since there's more listeners on the radio or what have you, and that way I can push them back to this show here so it's archived, because it's all about giving. If you're not giving, folks, you're absolutely not living. So that's first how you identify a breakout. That's step one. Step two is identifying the reversal, understanding when the reversal may be underway. Now, you've listened to me, one of the other tools that I use in my toolbox that I'll be teaching folks attending the Master Trader Series courses, which candle patterns to really be paying attention to, how to spot them. In this case here, it was the bullish engulfing candle that gave us the signal that there was going to be some type of retracement. In this case here, this is where this body of this red session candle, folks, totally engulfed the prior session. That says, okay, timeout. We're going to go ahead and we're going to start a retracement. Now, step number 3. So you just want to be able to identify the reversal, and you can have a list of stocks that you're following where you've had breakouts. Some may never come back there. And if they don't come back there, no big deal. That's like somebody giving you a fishing hole, and in this case here, you don't have to go spend time in that fishing hole until it actually comes back. And if it doesn't come back, put it off to the side. So you want a list of these stocks. Step number 3, folks, is really identifying that reversal pattern. So we got the signal, which was that bearish engulfing, but then the pattern that was in place were the ABCs. The ABCs that I try to teach you here during the radio show, the ABCs that I'm going to immerse folks into during the Master Trader course. In this case here, take a look at this A to B equals CD pattern. Beautiful setup. Because as it gets down to the B point right here, when we're making an ABC down and we're crossing on this trading session, which looks like maybe that was, the 29th, or maybe it was February, or maybe it was March 1st, folks, what you can see is take a look at the volume as you're crossing the B point. You see this is the volume down here? As you cross it, you're on lighter volume, even as you're down into it on lighter volume. That's a beautiful thing. When you cross a B point with volume, it says you've got conviction. Now, that conviction may be not only just to complete the A to B equals C to D, but in this case here, if I showed you the retracement from A to B, you'll see that that's probably more like a 0.382 retracement. And if you were coming through that with volume, that says, in my book, you're going to do more than a 1-to-1 A to B equals CD, folks. In this case here, this gave us a signal, just a 1-to-1 A to B equals C to D. Step 4 is identifying the sacred geometry. What sacred geometry is inside this pattern? In this case here, yes, this was the breakout over here, but the low swing point was all the way back here around December the 29th time frame. That low was at $1.37, whatever the date was that was on there. So from that low all the way up to the high of that bearish engulfing candle, what we see also occurring at that $1.54 area, folks, a beautiful 0.786. Your range was $1.54 to $1.58. When we get back, we're going to complete this trade here, see where it landed us, because I want you to be able to make a boatload of money, folks. We'll be right back.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this traders market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Hope you're having a fantastic Friday out there. I know we are around here. If you're just joining us, I'm showing you a great pattern to be able to be traded. This one is relatively easy to understand because just simply showing you how to actually trade a breakout, reasons why you don't need to chase it. Just let it come back to you. Just have a long list of stocks that have broken out. If you're just joining us, you can play the archive of this show. It is on Channel 10. So let's go. We were just finishing up here with the ABC pattern, the sacred geometry. So you want to make sure you understand what sacred geometry is going on inside whatever it is you're trading. In this case here, you're looking for things to line up with each other. And you don't want to be exact to the penny. You're looking for a range here. We're not about perfection because perfection just simply doesn't exist. It's the absolute lowest standard that exists on the planet. If you know somebody in your life, folks, that is all about perfection, then help them out. In the earlier show, when I kicked off the morning show at 9 o'clock, It was just simply that, the most important thing, happiness only comes from being able to help others, and I want you to be able to help someone else. So find a nice way to be able to help people. You can say, hey, I was listening to this crazy guy on the radio, who's got this, who just has this different belief system. And what he said was, and he kind of makes sense, what do you think about it? That perfection is the absolute lowest standard out there, and the reason is because it can't be attained. It absolutely cannot be attained, folks. That's why it's the lowest standard. What you want to have, folks, is you want to have a standard where you are outstanding. That's all we're looking for. We're looking for outstanding patterns. We're looking for outstanding ways to live our life. This is an outstanding pattern that I want you to be able to trade. It's called the breakout, if you will, and waiting for the market to come back to you. So we've got our ABC, completes at $1.54. Our 0.786 completes at $1.58. There is our range. Step number 5, wait for the market to come back to us. And what happens to us? Entering the trade. Look at this. The market on this day here, I don't have an intraday chart here for you, gets down right to that $1.58. Gives us the signal. My clients and I, we got the indicator on this. We went in that $1.60-ish level. $1.60 was where some of us were able to get in, maybe a few pennies higher. That is what you're looking for. And so now what you also have here, we've entered the trade, and then you're also looking for, well, what other pattern, what other confirmation did we have? And the confirmation that we had here, folks, this was a bullish engulfing candle. So look at the top. You gave us a bearish engulfing candle, and look at the bottom. Gave us a bullish engulfing candle. Now, what do you need to know about this high up here? What do you need to know about these tops? This 236 area. This is a normal area, if you will, of resistance. So as EXM starts its move up, you're going to have to look. This is where the pilot, and if I'm your pilot, I'm putting on the little button that says there may be turbulence ahead. Buckle your seatbelt. Well, you take a look at identifying the pattern on the way up here. Take a look at, again, EXM here, folks, making an ABC on the way up. Remember, I suggested take a look at patterns that are prevalent inside whatever stock or ETF or anything that it is that you trade, because you're going to see them you're going to see them time and time again. In this case here, it's making ABCs. It's got normal breathing patterns out here. Made an ABC on the way down. We showed that, making an ABC on the way up. In this case here, remember the ABC on the way down because we wanted to buy this, if you will. It didn't have conviction. That means it didn't have volume as it was coming through that B point. Well, take a look at this. It has volume coming through the B point. That's this red line going across here. That's the red line here. We came through that. The market, if you will. Because this is my team. I was pulling for my team. It came through with conviction. Now, here's the interesting thing. Take a look, if you will, at this retracement. Not much of a retracement, probably 0.382, and we'll put the live chart up there, if you will. But what you had was a nice confirmation that this was going to at least complete the 1-to-1, more likely the 1 to 1.272. And that was really a key number, and you'll see why. So that's trading the breakouts. We'll go back to it. What I also wanted to do is just quickly, the trend is your friend. And folks, you can Google this. You can Google summation index. I'm not going to go through the makings of it. What I will have you do is I'll have you focus in on this center part right here where my cursor is. This is the summation index for the XLE. I will tell you right now the summation index for all of the indexes is up. The S&Ps, the diamonds, the Dow, the NASDAQ, and may even be this. Well, I don't have the small cap. When I do take a look at the S&P, though, I like to dig down into the sectors. Are you somebody that likes to play the DIG or the DUG or maybe the triple, if you will? Well, if you do, what you'd like to be able to have is this tool. My clients and I will utilize this tool. We went short the XLE. As soon as we saw this take place, if you will. And we did this. This was several weeks ago, if you will. We went short this sector by going long the DUG. The trend is your friend, folks. If you could just learn one thing, if you could just simply buy these little fish hooks, if you will, is kind of what I take a look at it, where you've made some turn, and you may not short the market, and that's cool. But this is a tool that will absolutely help you understand what the trend is and when to then be in cash. And this is more of a shorter term, intermediate term trade. For longer term trades, and people managing their money, I teach them other tools to be able to use, if you will. But in this case here, for your intermediate or your short term trades, if you will, you want to understand what's going on. In this case here, you'd want to be long. Look at this and look. Do you have to catch it on day one? Absolutely, positively not. You can wait for some pullbacks into some normal retracement areas, but this is a summation index. You want to be able to use this. And then most importantly, be detail-oriented. Understand your trading system. Understand your winning and your losing percentage. This is my actual live trading system. This is before we closed out half of our position inside EXM this morning. And this, folks, here, it's just so important to understand what is the expectancy. What is your system churning off? In this case here, we've had actually 88 trades. It's produced a 34% return. If you are getting 34% returns, God bless you or more. And if you're not, you should be. And you can easily test this out just simply by either going to my Master Trader course, if you will, or you can just simply also test out my newsletter for 30 days for free. Master Trader course, we've never done it here, folks, before. Unconditional money-back guarantee. Plus, it includes 3 months of my newsletter services. Plus, it includes, Tom. So we're going to go ahead and include that in there one day of Tom as well. So, give that a check out, folks. Let's go back to that trade. So let's go ahead and pull up the EXM so you can just understand, how it is that we're taking a look at that trade, how it is that we're managing it. Let me just close all these windows here. We'll just start with a fresh chart. That way we're going live into it, and I'm showing you exactly why we do what we do, or at least why I do what it is that I do. In this case here, we exited half of our position this morning at $2.19. Now, where this traded up to was $2.26. So I missed that first high by, what was that, 7 pennies. Oh, you cut me some slack out there, I hope. And the answer is yes. So let's take a look at the ABC patterns that we were taking a look at. So when we take a look at that first A to B equals C to D, and when we got into the trade right here, that was when I traded down to 158. Remember that 158? That was that 0.786. That gave us our signal, if you will. What is 1 to 1.272? Remember, I said here, if you take a look at that A to B equals C to D, and I'll do the retracement for us right here, that it was like a 0.382. That first line right here, that's what you're looking at, is a 0.382 retracement. When you do a 0.382 retracement, and you come through the B point with volume, that's what we did. Remember, you saw that on the chart that I showed you? You came through that with volume. What that tells me, those two factors tell me that what you're going to do is more than a 1-to-1 A to B equals C to D. Well, knowing that that was the case, I put in for my clients inside the newsletter, let's sell half of our position at $2.19. The other half of the position was all the way up at the top, because the question is, are we going to close inside this high volume bar here? The low on that volume on that bar is $2.12. You're trading at 213 right now. Now take a look at the volume that you have in there. 3.7 million shares. Today, so far, what we've traded is 1.6 million shares. Now, what I know, and we'll take a look, and we'll dive down into the intraday chart. What we're doing is we're taking a look at the volume bar. So now, is this going to maintain the same type of volume? Probably not. But you do have some volume coming into that swing point. If we do close inside here with volume, then what EXM wants to do is go up and test that high at $2.36. Where's our next exit? Well, our next exit's really about $2.35. But as I tell people in my newsletter, don't use my exact penny, if you will. Usually give it a little bit less. $2.31 is probably where we will likely exit, between $2.31 and $2.35. That's the 1 to 1.618. We'll just see how this continues to trade today. But what else? So what we knew, folks, is that we have this bearish engulfing candle right here, right? That's what says you need to be cautious, because that's going to act as a resistance area. It doesn't mean that it can't be busted through. It just means it's going to act as a resistance area. And are you going to complain about making 37% on your trade over a period of 7 days? Well, if you are, then you have the ants. Those ants I call automatic negative thoughts, and those are really not very good things to have. You want to get rid of those ants, folks. And a lot of people aren't in the money game, and they're not in the money game because they have automatic negative thoughts about the market, that you can't control the market. But guess what? You absolutely can't. You don't need to control the market. All you need to control is your trading. You need to just simply control the things that you can control. the market is stacked against me, because of what it is that you hear on the media. Do you really think they want you to get involved with this money game where you can just simply make great returns? Do you think that maybe when you consider that 70% of the people in the United States have got 401ks, through their business employers, maybe their rollovers or what have you, and they're being managed by a little checkbox? Maybe you have this Dow fund, this fund, that fund. And look, I want you to have retirement funds. What I want you to do is I want you to manage those versus just by checking a box. I mean, most people, I think it's 83% of people out there spend less than 1 hour a year. 1 hour a year, folks. Think about that. And they've got $100,000+. They spend less than 1 hour a year actually managing their money. Not a good way, because we can teach you different tools that are out there so that you can really grow it, because you need to be able to grow your money. You're not going to really get it by keeping it in the bank. And I understand, fear. False evidence appearing real. You bet. I absolutely understand that, because it is false evidence. And so there are ways that you can learn how to manage your money. The problem is that people don't teach us about risk, the proper way to use risk, the proper way to use 1%. You realize on this EXM trade, folks, we didn't risk 1% of our working capital. It wasn't there. We didn't need to risk 1% of our working capital. It was like 0.5% or less of our working capital, if my memory serves me right. You don't always even have to risk 1%. It's a matter of understanding, what percentage of your capital you're going to risk, what your stop is going to be, and then figuring out your position size. And that's what I do, in detail inside my newsletter. It's what I do in detail when I try to speak with you on the air here, and certainly what we'll be doing and covering inside the Master Trader course. So our first exit, 219, that was hit. That was a beautiful thing. And what did we do? We went ahead and moved our stop up this morning. Our stop originally, before the trading session opened, we brought that to break even. So we weren't going to lose money on this trade unless somehow our stop got jumped. What did we do intraday? Folks, what we did was I brought my stop up to $1.94. Good question. Why $1.94, Steve? Well, number one, I'd like this thing to run. We had a nice pop-up here at 9:45. You had 366,000 shares coming into this thing. And as that was, because you got a nice volume bar, I'm going back to the lowest volume bar that we've got out here. That lowest volume bar right here at 15:55 going in to yesterday's trading session. So in essence, that's where our breakout is, or our breakout could be this candle right here, the actual 4 p.m., the last 5 minutes, if you will, at 5 p.m. You can see the low on that is $1.95. So I gave it 1 extra penny below that. If we get stopped out at $1.94 today, am I going to be an unhappy camper? No, I don't think so, because that would be a 23 or 24 or 25% return or something like that. But it just simply means I came down to the intraday chart, taking a look at where else do we have some possible support. You can see I also have this set of candles out here with volume that came in at 2:25 in the afternoon yesterday. 197 is the low there. The other candle, the low is 199. So I believe that the 193. No, yeah, on that one candle there at 225, the low of 197. So I think 194 should be out of harm's way. We'll let this puppy run, see what the volume does during the day. May adjust it as before the close. What I am looking for, though, is for this to, what I want to see in order to stay in on this trade today. Let's take a look at it. I want to see it close above $2.12, and I want to see it do somewhere around 3.7 million shares or more. Now, if we can get more than 3.7 million shares, what I will do, folks, is we will change our exit strategy from that $2.31. Why will we do that? Because if we're starting to come into this swing point on volume, not only may we get to the high here of $2.36, but oftentimes what a Gartley pattern sets up is the next A to B equals CD pattern. So let me show you what that looks like. That A to B equals CD pattern here, there we go. I'm just going to leave the Gartley up there, says this. This becomes our A point all the way down here at that December 30th low of $1.37. Our B point now adds up being that February 14th area. Again, that's got that high volume, 3.7 million shares. Our C point is the low where we entered the trade. Well, an A to B equals C to D takes you to $2.57. And a 1.272 to 284. We would do this whole thing over. Come up to the top, use our sacred geometry, see what's lining up. Look at how that 0.618 lines up with the new A to B equals C to D. You got to love it, folks. Dow is up 7. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. 877-927-6648. And Friday is winding down. It's going to be a great sports weekend. We got the PGA in town here. Padraig Harrington, he is celebrating St. Paddy's Day. He did that by shooting a 10-under yesterday. That was a beautiful thing. You've got the NCAA tournament, some hockey. You've got Sid the Kid. He's back, and he was off to a good start, so I'm sure that NBC is probably trying to get that game on for a game of the week. I would think that would be either Saturday or Sunday. I don't know for that to be sure. But just a great weekend. So make sure you have a great weekend, a safe weekend. And what I do have up on the screen here is the XLF. The XLF has truly broken out. We were showing a 1.272 expansion off of the October swing point here. We were showing a 0.618 Gartley sell. It was a Tiger Gartley sell. That failed. And when it fails, folks, what happens is it moves up to the next level. Well, what's that next level? When a 0.618 retracement fails, that means it's going to go to floor 0.786. No different than you punching the button for floor 6 or punching the button for floor 7 if you're on an elevator. The markets respond the same way. They just simply have 3 floors that we look at that are retracements. That's 382, that's 618, and that's 786. And there's 2 expansion levels that we take a look at, and that's 1.272, 1.618. Oh, and yes, I've got some confirmation from Ken from Philly. It's going to be the Flyers against the Penguins at 12:30, live. And I imagine that is going to that is the game of the week. So you knew that somehow that would be out there. That should be a great game. I know I will be likely watching that, or at least the replay of that game. Now, in the XLF, again, when you fail at a 618, you go to a 0.786. Where did the XLF get up to? It got up to a 0.786 yesterday, and also it is a 1.618 expansion of the swing point. When you have these types of Fibonacci numbers coming together, this is the universe, folks. This is just simply the way the universe. You want to be aware of these, and this becomes a Gartley sell. Now, would I actually sell the XLF? Absolutely, positively, without question, no. Even though this is a Gartley sell pattern, what I do is I also use volume in my analysis, and you should use that as well as a tool. Why? Well, take a look at this. Look at the volume. Look at the support that you've got in here. You've got support ranging from 14.95 to 15.44. You're trading out 15.70. So for those of you that, do trade these patterns or think about trading patterns, or if you hear me say, hey, this is a beautiful, you see this beautiful sacred geometry and you see it's a Gartley sell, don't. In my opinion, if I'm going to give you advice, and I'm going to blare it into the microphone since I have the microphone, right? I'm going to tell you, don't go short the XLF, even though this pattern here is set up. You don't have any kind of confirmation whatsoever other than this beautiful pattern that is set up here. But what you've got is you've got support right up here at the high, when I say up the high, again, at that 1544 area. If we just simply go take a look at this on and so that's why I want to be able to show you that, part of when you take a look at pattern recognition, it's really being able to put these tools together. And that's what I do. Does that mean with certainty that all trades are going to work out? Absolutely, positively not. They don't need to. I expect. That's what a master is. What a master does is a master expects that things are not always going to work out. And then you're ready to respond. You've always done that in your life. You're a master of many areas of your life. Become a master of your money, and go ahead and sign up for the Master Trader Series course. That's in Denver next week, March 23rd and 24th. Do something special, folks, for someone that you don't even know. Do something unconditional. Do that this week, and you will attract so many great gifts in your life. Thanks for giving me the gift of your time. Stay tuned for our man, Basil Chapman. He's getting ready to hit a grand slam home run, folks. I'll see you back at 4 o'clock. Stay tuned, Nico DeHaan, after Basil. Have yourself a wonderful weekend, and I'll see you Monday morning.